Hi, everybody. I trust you are all well. And it's really good to see everyone back on our Wednesday show. Now, if you were with me when I had my guest presentation at the Trading Buddies show, I spoke about going short on the euro and the setup that was there. So when I talk about that and what happened, I think I had some pretty good trades. But before we do that, quick look at the 7 markets that I trade just to see what's taking place there. JPN 225, Nikkei 225. Nothing much to do there. You know, if you didn't get in here, this is part of my reversal strategies. There's no point jumping in at this stage because of where we're at. But where we are now, depending on what happens today, if it ends up with this kind of tail at the bottom of the day, which is buying pressure, whatever size it may be, I'm going to be looking at it tomorrow to see if I can go long. Now, why would I want to go long? Because for all the buying pressure I can see with all the tails here, and to be a double bottom, I would have to wait to see if I get an attempt to break beneath here and jump into one of my reversal into 2 or 3 day trades. You know, the other 2.3 trades, that's what I call them, and see if we can go in. So looking at it, by end of day, we'll come back and have a look at it. UK 100, FTSE 100 derivatives, I like to call it. Nothing happening for me at the moment. When I say nothing in terms of not seeing any setups that I need to go down to the daily time frame, I mean to the 5-minute time frame. This is a daily. Very strong channel here. This blue line high on this chart, which is also, so it's a very, very significant level. There's not much strength being displayed here. Okay, while the market is going up, we're in a wedge pattern. So I have to wait and see if the bulls are strong. If they are, they might just carry on in a tight bull channel, which is another form of a breakout. But if you were to ask me what I am looking for, 60% chance is a strong break beneath the 10 EMA in an attempt to test this. And on that attempt, if you get a break beneath it, look for a lower high. If you get a bounce off it, look to go long. So we're waiting on that. US 500, if you didn't get in, you know, at this point here, that's perfect setup for one of my other 2.3 strategies. If you didn't get in, no point in getting here. You need to just wait and see what happens. Even if today closes on its low, that's a problem that the bears need to get through, and that's a problem that they need to get through. So a trading range has been formed. Trading range, double bottom, high, low. So we watch and we wait. Hang Seng 50, Hong Kong 50. Trading range, attempt to break out above that, and bit of a pullback to the 10 EMA. Now, depending on what happens today, there's still some key levels above here where the market may turn. Remember, last year sometime, if you're with us, you know, with this gap down, we made some good money there. So there's a key level in this little trading range that's here. So it wouldn't surprise us if the market had another acceleration, leg 1, pullback leg 2, probably get to that. And if bulls are strong, they may want to go and test that before we get the market turning. So I'm looking at this this evening, end of the day today. If I get a decent enough bull 2-bar reversal here, it's going to be worthwhile to see, you know, if I can jump in on the 5-minute and just ride that a little bit higher. Oil, definitely nothing I'm doing. I gotta wait because I'm not gonna want to go long up here, especially after breaking above this key level. That might be a failed breakout. You know, if you wanted to get long, you should have been long somewhere down here, you know, following this up, but not up here. Now, I'm saying that really on any time frame, you can still come and buy here. But the point is, where do you put your stop? You know, the correct place to put your stop is down here. That's the correct technical level to put your stop. So I don't know if you want to risk that much, but if you trade in the daily, the weekly, it may be okay to do that. That means then you're just going to hold through any pullbacks that you get. Gold, nothing we're doing. Like I mentioned last time, I think I took it off. Measured move. You know, if we break above this, the bulls want to get here, which will be a close above that, but the bears will defend that. So I'm going to, you know, see if we get above up to this level. If we get double tops or reversals, then I'm going to go short and just try and, you know, trade it like here, all the way short. On the other hand, you know, so I'm not doing anything within this range here. If the bears break beneath here, in this range, then they need to get down here. That's the measured move target. That's where they want to go. But then, you know, there's a level that's within here. So if we get down here, if you haven't picked up any trade, you know, break, pull back, trade down, if you haven't done that anyway, if we have strong, so if you have a succession of bear candles, get to the bottom here, break beneath that, bit of follow through and pull back, that's where you're going to look to go short, but you're only going that far. Okay, so we're just going to watch gold and enjoy the precious commodity while it decides what it wants to do. Okay, so let's have a look at euro. All right, so ignore this little blot here. This is just what I've got on the 5 minute. When we click down on the 5 minute, everything's pretty clear. I'm looking for some setups. Don't know if I'll actually take them while we're trading, because I have to be focused on what we're talking about, but I'll show you what I'm looking at presently and why I want to go in the direction I want to. So on Monday, I was talking about this. I started work on Monday, and that would be a perfect setup for a reversal into a 2 or 3 day trend. So that's, you know, there's 2 or 3 days with a bit of a doji there of a trend. We might have another day. Now, after that, you know, I went into the market around there. I got stopped out. Can you believe that? I got stopped out. You know, I always get stopped out 40% of the time. Isn't that interesting? But I do get stopped out, which is perfectly fine. It's the cost of business. You know, I'm an entrepreneur. This is my business. There's a cost side to the business. But that didn't detract me because the setup is legitimate. So stayed in the market, got up and looked for trades, and we had a beautiful run yesterday. Absolutely good money, paid up for the 1% loss on the previous day, and banked a lot of good money. Bank some money. So, but that's the way it goes. You know, if you get stopped out, I remember way back when I don't know, 10 years ago, one of my early coaches, actually could have been PB himself, said to me that if you get stopped out and you've taken a strategy, you must celebrate. You have to change the neural structure of your brain. Okay, get stopped out because you've done the right thing. That's perfectly fine. That's cost of business. If you get stopped out because you've done a stupid thing, or if you have made money because you made a stupid thing, you need a slap on the hand, because then you're going to just create, you know, wrong patterns and behaviors, you know, in your neural structures. So we want to make sure we manage these 100 billion neurons that are in our central nervous system correctly. So I have no problem getting stopped out. I have no problem taking money out of the market either. So here's what's important. Daily setup, high of yesterday, low of yesterday. If the bears are strong, okay, the bears would like to make a measured move. And if they do get the measured move, it's going to be all the way down here, okay, which is good for the bears because they've closed beneath a lot of floors. But we're still at a double bottom, and they're trying to test the low of last year. Okay, that will be the whole point. They want to test the low of last year and see if the bulls will come out and defend that level. Okay, so because of that particular setup that we have, my bias, I'm always right. 100% of the time, I'm right 60% of the way. I'm always right 60% of the time. Okay, so that's my measured move extension. I've shown you guys how to set that up. 50% pullback is absolutely key, because in spite of the strength of yesterday by the bears, they may want to come and test the midpoint of yesterday's trading range. Whenever you have a trading range, 60% is absolutely key. And of course, there'll be an extension that could be a level of support to 60% of the day, but the full goal is to get to 100% of it. So I'll show you a little bit of what I did yesterday. Let's have a look at how things are unfolding. What I want to do is this. Let's have a quick look at today, and then we'll just go back to yesterday. So remember how we set up our daily levels. There's a low of yesterday. There's a 50% of yesterday. So my bias is I'm trying to find ways to get short. Okay. If I don't get a way to get short anyway up here, I really have to get short when you break beneath the low of yesterday. Okay. But presently, I'm looking for ways to get short, and I have been since the morning, but I haven't managed to get it. So here's what's transpired so far. Opening of the day, trading range formed. Whenever you see a trading range, you put your measured moves in, okay? Because if the bulls break, they want to get to that measured move. So it doesn't matter whether it's a range of the day or just on the 5-minute time frame you're looking at. So this is what transpired, trading range, and I saw that and I said, okay, I think the bulls want to get to that level. So I'm not going to sell before they get to that level. Okay. So there's the trading range. They did break above that. And in breaking above that, after the double top, where they pull back, another trading range formed. So that gives me another hidden level of resistance that the market will most likely turn. 60% of the time it will turn there. Okay. And if you have a look at it, sure enough, 60% of the time later on, market reacted. And it's reacting off that hidden level of resistance because there's a trading range here. And if for any reason you took that trade long, that's the goal. You want to get to there and take your profit. So that's why we have this profit taking. But in all of that, we also had another trading range here, high, low. When I see that, I say, oh, okay, there's another level where the market could turn. The market turned there. Okay, with another trading range formed here with this pullback, profit taking, whatever it may be, and another level that turned there. Now, why are these interesting? Because I'm looking to go short. I'm trying to find ways to get into the market, and everything has to come together. Let me just check the question here. Hey, Tankyo, how do I determine the levels? Okay, I think what you're asking is how do I set those levels? So you got this tool here, Fibonacci retracement up here. So if you click on that, I'm just going to put it here. And if you just draw it like that, you'll have many things here, many fib levels. But what you want to do, double click on it. Double click, right click. Okay, go to Fibo properties. And you go to Fibo properties, and they are our Fibo levels. Okay, what you want to do is make sure you've got the 0 will be there. That's your starting point. 0.5 is a 50% extension. Okay, you want to have 1, which gives you the full 100 extension. So let me start again. So you got a range. 0 is the bottom, 100 is the top, 50% is the midpoint. Or if you're taking your range from the top to the bottom, that would be labeled as 100. 0 is at the bottom and 50 is the midpoint. Okay, so that you need to have. Then you need to just type in 1.5, which gives you the 150 level. Okay, 50% extension of the trading range. So that's the full trading range. You got 50, the midpoint here, that's the 50. The 150 is just half of that extended up or extended down. Then the other one that you want to have is the 200. Okay, so when you click on your fib levels, it's going to have that. I've clicked on defaults. Okay, it's have 0, 2.36. It's got a whole ton of things there that you got that you don't need. Okay, so you need the 0, so you go 0.5. 0.5, and that's 50. That's our 50. Go to this one. We don't need that. We just click delete. It's gone. Okay, there was already a 50 there. That's fine. We delete that. We don't need 0.6. We delete that. We've got the 100. So far we got 0, 50, 100. Okay, we don't need the 1.6. So let's just put our 1.5 there. And then 150. And then we don't need 2.6. The last one, we want to put our 2 point, which is 200%. Okay. So that's what we now have on our list. If you have to go common, that's what, if you want the color, whatever color you want. Parameters, it's don't click on gray because then the lines just go all over the place. Visualization must just remain set on all time frames. Okay, and you click that, and then you got it set. Okay, so that's how you set it. Then of course, when you want to draw, you just click on that, and okay, let's not do it there. So for example, if you want to see how far the bulls are likely to go, okay, just click on the top of the trade range you're looking at, drag it down to the bottom. Let's say you're looking at that. That says to you, there's a midpoint of it, 50% extension, and then 150 at the top. Similar on the other way, if you say that's a little trading range, I want to see how far the bears will go. So from that low to that high, that's the range you're looking at, 50%, and then surely that's where you get. Now, I'm always saying that with my strategies, I know for a fact that if it's all working on 60% of the times I'm right, 40% I lose. It is more, but I'm comfortable with 60, then I don't get greedy, I don't panic, I don't do foolish things. But with measured moves and those leg 1, leg 2 extensions, I can absolutely guarantee if you do them, if you go and plot them on your charts, 99% of the times the market does something at a measured move. So it's really a powerful tool to have in your arsenal. Whichever way you trade, no problem. Whichever way you trade, that's a powerful tool to have. Okay, so now what I was saying, why do I do all of this work? Okay, what things have to come together? So the reversal at the measured move is absolutely key. But there is also something which I hammered on over and over last year that we need to absolutely grasp, and that is the fact that 3 push moves or wedge patterns, as we call them in price action, are absolutely key. Just as much as your measured moves show you the hidden levels of the market, hidden levels of support and resistance, your 3 push moves, your wedge patterns, also give you an indication where the market is likely to turn. So if you have any visible levels that you can see with your eyes, if you have the 3 push pattern, and I'll show you what I'm talking about now, if you have a measured move, if you get that confluence of strategies, then you have the confidence to jump in and execute your strategy, and you can extract quite a bit of wealth from the market. So I'm looking for three pushes. So that's, you can see that in the morning, that's pretty key. Okay. So the market tried to break above it, it failed. So now I'm saying to myself, okay, at this level here and that level is, it's a pretty close approximation. So for me, all of that's like the first move above the trading range. Okay, so there is no ways I'm going to jump into anything that looks like a setup here because I need to see three pushes. Now, the three pushes, the three wedges means the market has tried to get above the to a certain level and it has failed. Okay, so here I'm looking to go short. So I'm trying to find indicators that tell me the bears are trying to break above a certain pattern. I mean, the bulls are trying to break above a certain pattern and they're failing. In those three pushes, I want to see the strength of the bears. Okay, every time that the bulls fail and the market turns, what kind of a reversal are the bears bringing in? Is there strength in the bears? If there is strength in the bears and I see it setting up again, I get more and more confident to take my trade. Okay, remember the key level to watch if we do get the bear breakout is here, if you don't get anywhere here. But if we get the setup somewhere up here, man, by the time it comes here, you've locked in profits, you've banked some profits, you've scaled in, you've made good equity growth by that time, then it just carries on and on and on. Or it carries on maybe twice, on and on, not on and on and on. I must tell you, when I'm working from home and I'm doing a show like this, my wife says, you really got to enjoy your own company. And I said, why? He said, you're talking to your guys, sometimes answering questions, and then you're cracking jokes, but they're all on mute. So you don't know who is laughing and who is not. And I said, oh, okay, I think it's best I keep laughing at my own jokes. So at least you get to know a bit of my character. The point is to have fun. That's the whole point of this. And that's why we do all of this work, so that when we take trades, whether we get stopped out or not, we're having fun. We're not panicking, we're not stressed out, we're not sweating, we're not trying to fight the market. Market is here for us to take wealth out of it. Okay, so there is a first move. Okay, pull back. Then there's a second move, pull back, and then there's a third move. So by the time I got this earlier on, a couple of hours ago, I had the ingredients of a perfect wedge. Okay, 1, 2, 3. And what you want to see when you're looking for a wedge is at some level, one of these points, either the middle one or the last one, must break above the trend line that you've drawn. So there I was pretty excited to say, okay, absolutely fantastic. And what the other thing that makes it fantastic, look at where it's turning, all these hidden levels of support. So brilliant. So that's a couple of hours ago. I was saying, okay, happy to jump in and trade. I saw that. I like the strength of the bears. I didn't jump in here. I like the strength of the bears. And all I was looking for now is some form of a double top or a higher low that can resume. Did I get that? No. We just got a bit of price action within this trading range, but still providing information, valuable information. So I'm ready to trade. I'm looking for ways to jump into the market. So we get a trading range. What's the first thing you do when you see a trading range, when you're waiting for a setup? Okay, so those parameters that we set up. So click on your fib retracement tool. There is a height of it, and you say the bulls break above that. Where do the bulls want to go? Want to make a measured move. And I'm looking at it and I say, oh man, how boring. I was hoping that the 200 extension level will be here, get a lower high and jump in. But absolutely fine. So I had that in there. Let me explain this one. Let me explain. So this measured move that I had here, okay, that's the whole height of the trading range. Okay. So that's the full height of that trading range. And I said, okay, if the bulls are strong, they might want to put 2 or 3 push patterns to get to that height, which is perfectly fine. Okay. Then when I saw that, I said, okay, maybe they're only going to go that far. If they break above that, they want to get to that. So I'm still very much ready jump in and take the trade. What time length are you looking at? 15 minutes. I'm on the 5-minute time frame. I trade the 5-minute time frame. It's a good question, Diane. I trade the 5-minute time frame. Now, and I'll come back to time frames if I remember. Okay, let me talk about it now. You have to trade the time frame that suits your lifestyle. Okay, you have to trade the time frame that suits your lifestyle. Number one. Number two, any time frame is tradable. If your strategies are absolutely clear, any time frame is absolutely tradable. I mean, you can see, and I'll talk about the trades I took yesterday. I mean, you can see, I'm not panicking, I'm not rushing. I'm very clear about what I want to do. Now, you could do this on the 5-minute. You could do it on the 15-minute. Okay, do all your, now you could do it on the hourly. It's going to look a bit messy because all my markers are on the 5-minute. Okay, so it doesn't matter. The time frame doesn't matter. The key thing to bear in mind is that if you trade in the 5-minute time frame, there's a lot more things happening a lot faster. So same price action charts, but it's happening a lot faster. But it's pretty slow as well once you're clear about how you're approaching the market. So that level, I thought after that trade managed to get to there, but we have that level of resistance. Now, market has turned, okay, just below the 50% extension of that trading range, just fell breakout above that level, and that level, which is good. Still saying to myself, I want to see bear strength. Now, this is a bit of a problem for me. Unlike these 4 candles that we had here, you can see that strong bear candles closing near their lows, breaking beneath the 10, 20 EMA, right down here. So that was good. But now after 4 strong bull candles, there are 2 candles, bull candle, 2 candles, bit of a doji, another candle. I don't know where this is going to close in the next 2 minutes. So not ready to jump in yet, but still very bearish in my outlook. I want to talk about stops just now, where you put your stops. So this one is pretty fascinating in the present moment. There's a big push here, big push here. So who knows, if my whole thesis that I'm building up here, that today is going to be a huge bear day, if I'm right, 60% of the time, then we will get a third push up to here. And if it turns within this cluster of hidden resistance, if it turns and give us strong bear candles, 1, 2, 3, 4 strong bear candles, turns a little bit more, bulls try to resume and then give us a lower high, that's where you got to jump in. Okay, so question would be, why would you want to, let's say we get up to here. Okay, let's do this. Let's assume we get up to here. And then we do get those strong bear candles, so confirmation of bear strength. That's a wedge push, just 3 patterns, beautiful. Okay, and all we need is just a lower high, and we can look to take a trade. Now, these 3 push patterns, just one other thing to bear in mind. By the way, the guys in the office have put together an archive history of all the shows I've done. There's quite a lot, it's over 50. So just go through them, put them on fast forward on YouTube, and just find some of these things and just let it build some of these patterns in your own mind. So these 3 push patterns, so I'm saying 1, 2, 3. There's another variation which is important, which I spoke about here. If we get a double top here, okay, so the market has gone up, come back, gone up. If instead of going that far, the market does a double top right there, That is perfectly legitimate as a third push. Then we still just want to see the lower high. Okay. Then what is the point of all of this? You may ask, well, the point of all of this is to tell you where to put your stop. You always have to have a stop at the technical level. Okay, that's something that you have to drill yourself in. So if you are taking a trade, if something formed for us anywhere here or whatever, let's just say, your stop is going to be, that's what, 13, a minimum 15 pip stop. Now, if you just held on to one trade and the market goes our way, that's by the time we break into the low, I mean, you're already on 2-1. And then who knows how much you can get out of it. So just wait for it and let's see how it goes. Good question. Trend is up and I'm looking to go short. Okay. So the way I look at trades is this, the way I search for trades. I'm always starting on the daily time frame. Okay, again, ignore all of that messy stuff because that's okay. That's all. That's today. So that's all the 5 minutes you're looking for. So I'm always starting on the daily time frame, and I don't just look at a single candle the previous day. I'm looking to the left, and I want to see what has happened, you know, in the past as far as I can look, to get me information to say who has been controlling the market. So if we just go back, you know, if you look at the chart, and it's quite funny, you know, my daughter is 11 now, so sometimes she comes and says, so who is winning, the bulls or the bears? And I said, tell me what you think. And she says, oh no, it's all red. So the bears are in control, or it's green, or it's a mix. You know, it's just basic stuff which I've shown it, but it's important. That's how we're going to look at the market. If you just look at it, you could say, hang on a second. I think the bears are in charge. If I look at that, okay, and then the market has gone sideways. Now, some of that stuff that we spoke about is pretty appropriate here, right? So that is the extent of the trading range that the bears control the market. That's the midpoint of the market, okay? After this breakout, we have a small pullback there. So if you were to put everything on your chart, and I clean up some stuff because I want to keep my charts pretty clean. So bears are in control. This whole trading range here is simply an attempt to try and break above the 50% pullback, because the bears control the market. And then, you know, the market breaks above the 50% pullback, then means they're weakened. So I've taken the first leg and the second leg. So the first leg pullback and the second leg, that's a whole range they controlled. The breakout range that they controlled, just when there was no bull bars in sight, that's the breakout range. Okay. So the whole trend, which was first leg, pullback, second leg that they controlled, there is a midpoint, just a point where there is absolutely no bears controlling any candle. That's a 50%. So you see this breakout above the trading range. We know that most breakouts above trading ranges fail. So when you see a breakout, above the trading range, you're like excited because you know 75 to 80% of breakouts above trend ranges, they fail. Okay, the other 20% they may succeed. So when I saw that, when I was looking at my charts last week, and I came back to the market last week, but I wasn't trading, just to reorient myself. And I saw that, I said, oh, that's fantastic. This is likely to fail. Unless the bulls are strong to keep going up, then maybe we might get a bounce off there. So in this case, it failed, so no surprise. Now, there's this other 2.3 strategy I talk about. It simply means reversals into 2 to 3 days of a trend, okay? So when I see that, my mind is thinking of that, because that's where you extract tons of wealth from the market. So all of that happened, I think Wednesday, Thursday, Friday. So if I had been actively trading, this had happened on the Monday, I would have found a way to jump in there. And if you are patient, okay, to start to answer a bit of your question, if I'm going in looking for an R2.3 strategy, I'm trying to get a reversal trade like we're doing today, just tracking it. If I'm patient, the market is going up, I'm not going to go long, okay, because my whole assumption is that this strategy will kick in. So at some point, there will be a failure because number one of all these levels, and second, look at this preceding candle. Okay. The bulls tried to break about and show strength and they failed. So that was selling into the close. So that attempt by the bulls at any point might turn. In this case, it was almost a perfect double top. So that's where you'd have initiated the trade. Okay. Now, the fact that I didn't get into it, I wasn't trading, I looked to trade on this day, because on this day, I was saying, oh, maybe we might just get a setup. So there were decent enough setups. I don't know if you get a time to look at it. So the strategy is set up, but I got stopped out, and which is fantastic. And just park it. But still, the mindset was this is going to go short. Higher probability, although I talk 60-40, but when this trigger, I know we're talking 75-80%. So coming into yesterday, I'm now looking to say, okay, I'm still going to go look for ways to go short. Now, yesterday, it's really going to get cluttered, but let's do it. I'm just going to put the fib retracement. So yesterday, look at yesterday's candle. Okay. Let's see. Okay, so yesterday's candle, somewhere within there in any case. High, low, 50% pullback. So yesterday, I would have had my 50% pullback in there. And again, part of what's happening today, the market did go up. It was going up, but I was looking to go short. And then when I got a reversal pattern within there, then you jump into that trade. And, as it did, it went my way, then it kind of hung around. And I think towards the end of the day, there's a bit more movement. So it's the same kind of thinking because of this analysis and anticipating goes there. Again, still thinking 60%. I might spend the whole day having done a lot of work and nothing happens. And eventually, it might end up as this kind of pause candle. But unless I have the bulls closing above here, I'm still going to wake up tomorrow trying to find ways to go short. Okay. I'm hoping that I answered that correctly. Or I answered it correct, but I'm hoping it's clear. Okay, so we've got a few minutes. Let's just look at as quickly as we can on yesterday. Let's do that. I mean, when you look at this, you say, wow, what a beautiful day. But again, to the very point we're discussing just now, I took out my marking of yesterday's low. Sorry, guys, I should have put it in while I was answering Tan Q's question, but I'll put it in because it's just important to really talk about the mindset. So I'm hoping you all seen that, if you got your strategies clear, it's quite, price action trading is quite fun, actually. I think. Okay, there you go. So now you can see with a bit more clarity, there is the open of the day. And there is the low of the day. So based on what you'd have assessed and saying, okay, I'm still, in that R2.3 strategy. I've got to find ways to go short. Then your mindset really has to be just focused on trying to find ways to go short. So a bit of a trading range here, high, low. The more you put these in, the more they start to make sense to you. So you kind of say, oh, okay, the market may get to that particular high. You see any kind of pullback because you don't want to find ways to go long or go short. Okay. 3 push pattern, 1, 2, 3. Okay, but if the point is to have these things drilled into your mind so that when the candles are unfolding in front of you, you don't get seduced into just taking trades when you see a big bear trend or big bull trend. You gotta be saying, okay, I'm waiting for the 3 push pattern. I'll wait as long as it takes. If it doesn't materialize and the market moves my direction, that's fine. I have absolutely no problem with it. If it moves my direction, I get the setup, then I'm gonna trade. Okay, so a bit of a pullback here. Okay, right now it looks a little bit small because we got things crashed up and prices moved. But then high, low of this pullback, so market went up, came back to the EMA. You're saying if the bulls are strong, then I get to that level. And sure enough, the bulls get to that level. And they try repeatedly to break above it, break above it, break above it. Okay. Moment you start having a prolonged trading range, it's actually unclear who's going to end up ruling because there's a trading range, an area of price agreement. So there is price agreement to this stage, but your thesis is still saying, I am looking to go short. Now, other things that we start looking for, are there any micro double tops in a trading range? Okay, so this is something that we've spoken about before, but we'll discuss more and more as we see them. Micro double top, good. Attempt to go up, fails. Another micro double top here, so repeated micro double top. So you are saying, if I see the entry, I'm going to go short. You then have strong bear candles. You got to wait. You get a follow-through candle. Okay, get a follow-through candle. After a tight trading range, you got to take the trade. But the point is, where do you put your stop? Stop has to go into a technical level. We don't just plonk our stop above the moving average, because if you're wrong, the market might want to make a measured move then and then give you a higher high, and 10 before you get a lower low. Okay, higher than that, and then you get a lower high. So you always put your stop there. It looks far, but that's the place to put your stop. Okay, just slightly above that. In case you're wrong, the market goes up. But if you're right, then the market is going to continue to go down. So you might say to yourself, if I'm right, let me see what happens at the measured move. Okay. If this trading range is now going to determine the structure of the day, the market will bounce off here, then we'll just keep going sideways. Sometimes you have those days with a tail and a small body. That's what would happen. But look what happened. A strong breakout and follow through and all the way breakout beneath the low of yesterday. Okay, so you'd have taken a trade and held onto it. Now, if you missed that trade because it wasn't clear, this is absolutely important, because remember the thesis are you're thinking you're going to get a long bear trend day. If you miss that entry, do not panic, just wait. Like we've always said, strong bear breakout. Okay, so strong bear breakout. 50% pullback of that. That's a 50% pullback of that. Okay, my line is a bit long. So that's 50% pullback of that. You know, if market doesn't break above that and test above that, gives you an opportunity to go to jump in short. Okay, so if you saw that there is a perfect test of it, you want to wait. There's a double top with the hidden level. Let's find ways to get in. You could again jumped in on there or jumped in on there, and then just hang on patiently, put stop in the correct place and wait until you end of the day and just bank it. All right, guys. So went into a bit of detail. Let's see, I'm still going to wait, and hopefully 6% of the time I'll get rewarded by a decent entry, which by the time it breaks here, we'll have banked good enough money, and then we carry on. But thank you very much. We will see you next week, and keep a listen out for an announcement from the office about something exciting, a new program that you're putting together. But thank you, guys. Thank you very much. Bye-bye.